Good morning, big wave trading family. We are on the right side of the market so far. Hopefully, we'll see some follow through Tuesday in the overall stock market. I am getting a ton of long signals still. Like I say over and over and over and over, and have said over and over and over and over, I don't see how this is bearish. So we'll see if this continues, but I'm absolutely insane. I don't recommend you be as insane as me. 10 stocks, 10% of your capital per new high quality long position, as long as you keep your inherent risk under 5%. If that means you only have to, that you must obey the first and only stop loss level to keep that risk at 5%, then so be it. But no matter what, you should never be losing more than 5% ever on one single trade right now on any new long position you take. But all of these I'm about ready to go over have the prerequisite 4 to 5 to 1 reward to risk ratio. And all of them, if you at least use the first stop, have 5% or less risk. If you use both combined stocks, it goes well over 5% on these low price stocks I'm about to go over. And one quick reminder, all of the new quality long positions besides HEBT that I go over are coming from my low price perfect speculator scan. And why I'm looking for any price stock now is because Perfect Speculator Scan gives out some amazing new long positions. Some of the best returns come from stocks that come out of this scan, like the NVIDIA chart you're looking at. NVIDIA's in my CanSlim and Perfect Speculator Scans. But there are very few high-priced stocks that look like this chart right here. So because of that, and there's also CYOU, that's from my Perfect Speculator Scan, but because there's very few stocks that look like this, I decided to open up into my low-price scan. And I notice a lot of these small-cap stocks I'm looking at, I'm like, oh man, they didn't have the best looking charts on initial entry signals, but it's quite clear that if I would have seen this pattern and known it was a perfect speculator quality stock before, even though it's low price, that I would have taken it as a long position. So here I go, beta testing, and right now it's working out like on WCH. This is like one, you can see the little white arrow there. It's normally the day of or the day after whenever I add a long to this tracking watch list, but you can see DWCH, and then the worst one so far is ENZ, and as you can see, it's still pulling back quite orderly with a current loss under 3%. So that's what I'm talking about. So with that being said, time to race through the new long positions. NVIDIA, CanSlim quality, perfect speculator quality, 2% for each scan. Supposed to be a 4% long position in my portfolio. I am maxed out in cash, so I'll just buy whatever I can. But because it's slightly extended from the 20-day moving average, I'm not going to decrease the size, but I am going to use a limit order only at the closing price, 169. First stop, 162.26. Final stop for me, I'm going to use all the way back here to 152.91. And what do you risk if you're wrong? Excuse me, I knew that was wrong. 8%, okay, so that seems like that's going to be a lot at risk, right? But if you look at the previous measured move from the November lows to the August highs, 142%, yeah, that's more than well in my range. It's almost 20 to 1 reward risk ratio. I'll take that any day. CYOU, perfect speculator scan. CYOU is also a semi-CanSlim quality stock. The most recent EPS and sales growth is quite large. It just doesn't quite have an EPS rating that signifies it's a pure CanSlim growth stock. I always look at those ratings really quickly first, and that tells me if I consider it CanSlim or not. So CYOU doesn't have an EPS of 80, so it's not. It's half. So 1% for that being a half kind of CanSlim stock, 2% for perfect speculator scan, 3% long position. Want to get long, limit order 40.59, the high of the day. First cut loss level right there, 39.52. Final cut loss level, 38.53. Now we go to the lower price new long positions. DAIO. DAIO is coming above the 50-day moving average. Volume is slightly higher, but the whole point of this new long is that it's right at the 50-day moving average. That first cut loss level is right there. So if I get long DAIO at limit order 843, my first cut loss is 790, and then since it can't be a full position for me, I'm going to use an emergency stop all the way at 703. But if it fails 790 before hitting 703, whatever the next new low is, that becomes the final cut loss. There's no way this should ever come into play. But you can see the previous uptrend in this stock, 100%. Let's say that my emergency cut loss goes into effect, 10%. I'm still looking at a 10 to 1 reward to risk ratio. So if you can half that, on the loss side, this is a position well worth taking, especially since it's perfect speculator quality and it's also canned slim quality. It actually does have an EPS over 80, but lower price stocks are always a little bit more tricky. You can't really trust them. PLUG, this was also my perfect speculator scan. Once again, tightening out at the 50-day moving average. Amazing reward risk ratio. Get long at 217. My first cut loss level is 209. Final cut loss level for me, 198. But once again, I mean, even if we just go from here to here, we're looking at 156% upside. And let's say all hell breaks loose, 8% downside. I'll take that reward risk ratio any day. But plug, perfect speculator scan, quality name, but 1% because it's not high price. So like NVIDIA and CYOU get 2% for being perfect speculator, but like DAIO, PLUG, and PIRS, PIRS, they're only going to be 1% for being perfect speculator because they could still fail. But as you can see, once again with PIRS, if we just even start here, whoops, press the wrong button, go up to this high here, we're looking at a 200% gain, and if we go use these lows as an emergency cut loss, we're looking at over a 10-to-1 reward risk ratio. And then once again, if we get long with the limit order at 548 like I'm going to do, your first cut loss level is 507. So boom, you don't risk much there, and then the emergency cut loss, which should not ever come into play, 441. 507 goes, whatever the next low is, that's going to become my final cut loss level. These are just emergency cut loss levels in case like BONT in 2 days did what it did, but let's say that those 2 days were 1 day of price action and it was down 25% in 1 day. That's what those stops are for. They're for like an emergency crash like plug, that's funny. Pulse, PLSE. See what that did today? That's why you have emergency stops. Let's say you went for this oversold bounce play. Boom, you got, big failure there. So that's why I have 2 stops. And then an add signal, or a new long signal, that's CANSLIM quality. This stock, this IPO, has a 99 EPS rating, but it's only a $3 stock. Red flag, right? Okay, so keep that in mind. So 1% for being semi-canned slim, because even though it has a 99 EPS rating and amazing earnings and sales growth, it's a $3 stock. It's going to probably, look at all the accumulation off this July low. Look at this pullback here. A lot of well below average volume. And the big volume spikes come with intraday price reversals off the lows. So it appears that it has been under accumulation since July, and that's why it looks like it's trying to round out here. Pocket pivot point signal, above average volume, green bop. I want to get long HEBT at 310. First cut loss level, and your only cut loss level probably 288. Final cut loss level 260. Remember, if 288 fails before 260 comes into play, the new low is the final cut loss. But HEBT, once again, if this thing can get up to its old highs here, these July highs at 405, then these old highs, let's say back here 446, then 590 and 702, that's well worth it whenever I'm only looking at a potential 4% to 5% loss on the first leg. And while it would be ugly, let's say all hell breaks loose and it breaks below the August low, so 14% loss, I'll be out by then. But the reward risk ratio is there. But 1% for CANSLIM, because it's low price, even though it's got 99 EPS. 1% for being also a new issue in my IPO scan. IPOs have a chance to explode higher, more rapidly than stocks that have been around for a lot longer. So I always add to my position whenever it's an IPO. And then, so PIRS, plug, DAIO, CYOU, 2 add signals, H&H, high quality long signal. You can see I went long back here. Add signal here, add signal here. Pocket pivot point signal, higher bop. Beautiful. Look at all the green in this price bar, in this price chart. Only one red day right here. Want to get long with an add at 3260. First cut loss level 31.95 on this ad. Final cut loss level 31.65 on this ad. And then one final ad, another low price perfect speculator name stock. As you can see, I went long here, so I'm already long. Bounce off the 50-day moving average, pocket pivot point signal with BOP confirmation. INAP perfect speculator scan stock, $4 stock, so 1%. Limit 439. First cut loss level 417. Final cut loss level 411. Pretty clear cut. But if you just look at the previous uptrend, if we just use it from here to here, 320%. And let's say all hell breaks loose, you only risk 5%. It's hard to find a better reward risk ratio. All right, great luck today, everyone. Aloha.